This is Aaron Levine, LG Insurance, with another episode of And Insurance. We're trying to bring some great information out to the business community. And today I have with me Darren Dooskin from RPS. Darren is a member of our team by extension by way of our wholesale relationship to help us with some more complex risks out there in the market space for contractors and buildings and construction and all the fun stuff, especially in New York City.
Yes.
Welcome, Darren. Thanks for joining me.
Thank you, Aaron. Thank you for having me.
Give me an overview of what you do, how you do it, and how long you've been doing it.
Well, we at RPS act as your marketing department. We're able to approach insurance companies that look for unique risks that you wouldn't see every day. So you wouldn't have daily contact, but we would have daily contact. I've been doing this for about 15 years now.
Nice.
And our biggest exposure that we really see now is New York construction. We are seeing the liability side of New York construction. Just the rates are going up, the premiums are going up, and it's a very tough coverage to get.
So we talk frequently, and we've insured a couple of decent risks together. You know, during 2020, I think we started to see a hard market. Yes. And I think that hard market has continued into 2021. Are you seeing anything looking into 2022? Are you seeing some more capacity out there? Are you seeing rates flattening? What are you seeing in the market space as a general overview right now?
For the larger contractor, there are more options out there. The larger contractor being someone who's looking to pay over $100,000 in just GL premium.
Per year.
The smaller contractor has a few jobs, does home improvement. It's a very tough market in New York City.
We have a client right now that does some home improvement work. They do some work inside condo units. And we teeter on some of their insurance options because they're not yet big enough to purchase a more full, robust policy. But they have some exposure to some of these things, right? So New York is a very unique environment when it comes to labor law, yes. Absolute liability, and the such, and creates an interesting environment on the insurance policies. But we see a discrepancy of tens of thousands of dollars between a not so good policy and a properly fit out policy. So tell me, in your experience, what you see and when should people make the jump to a more robust policy? And then I want to get into what that labor law coverage actually talks about and how people and business owners and contractors need to protect themselves.
If you're a contractor working in New York City and you're going to have your own employees there, you will really need the labor law coverage to properly protect yourself. Otherwise, you will have a big potential exposure should someone get injured. New York has some very old laws. The labor laws are over 100 years old.
Wow.
They are around before workers' comp really existed, and they're set to protect any employee who falls from heights. The definition of heights is really not given. It could be someone falling off a step stool. And then all of a sudden, you have a full-blown claim. And as you said, it's full liability. So the contractor and the owner of the building have full responsibility for a safe place to work.
So we have a building owner, we have a general contractor. General contractor then hires subcontractors, and then on these large projects, there could be subs of subs. So let's call it, we'll just stay with the subcontractor. The subcontractor, we'll call it an HVAC contractor.
Perfect.
Employee of said HVAC contractor falls off of the first step of a ladder or has a serious injury. There are serious things that can happen.
Absolutely.
And there is negligence that could be possibly put onto the general contractor or the business owner in some situations. However, we see a lot of situations that don't kind of fit that. It's kind of what the F just happened here. I can't believe this lawsuit is going through. Yeah. So subcontractor puts a claim into workers' comp, and then
it starts in workers' comp and can stay in workers' comp for years.
And then drives home, sees a billboard of, Morgan and Morgan or whatever law firm wants to sue everybody out there that's on TV, and decides that they want to pursue this further. They then sue the general contractor and the building owner for liability on this over and above the workers' comp, right?
Correct. The injured employee probably would have, as you said, an attorney whisper in their ear, and they would file suit against the general contractor, the building owner. But in turn, the building owner probably has a hold harmless agreement with the general contractor and the HVAC contractor. So the building owner is going to be looking towards the contractor's insurance policy to provide them coverage.
So the building owner is going to go back down the ladder. We're making this overly complicated because it is overly complicated, but driving the point home, it's the importance of documentation, having proper contracts in place, and understanding what the contracts do and how the insurance is going to respond is extremely important.
Yes.
Not just in New York City, by the way. In any situation, a contract is going to be very important, especially in construction when these situations could arise. They could arise in New Jersey or Pennsylvania or anywhere else in the country. It's just New York City, takes it to a whole nother level. Right? So that building owner is saying, hey, you're indemnifying me here and I require you to have action over coverage in your policy. So I'm sending this right back down the ladder to the general contractor, who then should be sending it back to the subcontractor, who hopefully doesn't have this exclusion. So tell me how the exclusion is worded, what people should look for in their insurance policy, because it just doesn't say action over.
Well,
right?
Some of them actually say action over.
Okay.
Some of them would say any injury to an employee.
Okay.
Or worker. So if you have an injured employee, in most states, they would just go to workers' comp and get their benefits. Right. In New York, they would look to the GL policy, the liability policy, over and above the workers' comp. So any exclusion to the employee would be harmful. They could also have contractual, because all of the agreements are contracts. So if you have a contractual exclusion in your policy, again, the coverage would be denied.
It's
very
terrible.
Complicated. But that's why you want your New Jersey contractor that comes into New York really has to sit down with an insurance broker like yourself that is familiar with these rules and these contracts to get them the correct policy. Because if they show up with their New Jersey policy, they won't have this coverage.
It's funny. I've seen contractors, subcontractors, quote unquote, bid on jobs, and they win the bid. Oh, I need a certificate. Oh, sure. It's going to cost you $50,000 more in order to get insurance to cover the job that you just, quote unquote, won. Yes. There's a reason why you were the low bid, by the way. It's because they probably knew you didn't have proper insurance by the way you were bidding on the job. Because a lot of these bigger companies are smart and they're well aware, and they have lists of unacceptable insurance companies.
Which is very large list.
Large list. You have a copy of that list. I've seen that list. Maybe we'll post the list up of these things. But if we have a subcontractor we'll stick with HVAC. Sorry to the HVAC guys out there. But if you're a New Jersey HVAC company and you want to bid and do work in New York, you most likely on your insurance policy have an exclusion that says exclusion, New York, period. Right? Like,
absolutely.
Sometimes just the 5 boroughs, but oftentimes it's the whole state of New York that you're not allowed to go work in New York if you have a traditional New Jersey policy because of these injury to an employee related issues that could arise.
Yes, and these claims really do grow, where a small fall in New Jersey could be a $10,000 or $15,000 workers' comp loss.
Right.
That could escalate into a few $100,000 or possibly $1 million general liability claim in New York City.
That's wild. It's a reason why, the insurance costs are so high, not just for injury to an employee. New York also has an absolute liability law. Something falls from height, right, off of the scaffolding or off of the roof, and somebody gets hurt. There's no defense.
Your average job in New Jersey, you could be working 2-3 stories.
Right.
In New York, literally the sky is the limit. I mean, you see these buildings go up, you see the scaffolding go up. Someone has to do that work. So there is a lot bigger risk out there, and there's the injuries happen.
Right. Right. So absolute liability, injury to an employee. Now, are you seeing any slowdown in people wanting to purchase insurance in New York right now?
The New York construction area is growing. There's more jobs in New York construction between rehabilitation of buildings and new construction than basically anywhere else in the country.
Sure.
So everyone wants to get a little piece of it. New Jersey contractors, we've seen Pennsylvania contractors, Connecticut contractors, all looking to bid jobs.
Right.
And they sometimes have a little sticker shock when they see the cost of the premium.
Right. Because they don't know how to bill appropriately.
Yes, their policy doesn't cover for this work.
Right.
Especially if they're building a new building, 5, 6, 7-story building. A lot of policies have height limitations, which is even outside of the New York labor law. But if you have a 3-story height limitation on your policy and you're building or rehabbing a 5-story building, you don't have proper coverage.
Right. Do you ever find some of the larger general contractors will use a wrap-up style program? Is that still something that's out there or not so much?
On your biggest of big jobs, yes. You do see the wrap-ups where they require.
To me, that just seems like it's easier to do a wrap-up because you know the proper insurance is in place and you take it off the top of your subcontractors anyway.
Yes.
So then there's no room for error except you're on 100% of the liability and you have no risk transfer, right?
You have no risk transfer, but you have proper coverage in place, so you really don't have to worry about the risk transfer.
Right. Kind of goes
but that's
both ways.
Really, you're talking the top 1-2% of the big jobs. I mean, those are on the biggest of the big jobs and some of the government jobs.
We'll work on getting some of those over your way.
But your average apartment rehab, building rehab, brick pointing, those aren't really big enough for a wrap-up.
Right.
So the general contractor and owner have to make sure each subcontractor, including your HVAC guy, has the proper coverage when they're on the job site.
So the building owner and the general contractor are checking insurance, right? So we're making sure that they have the proper insurance policy with no exclusion for injury to an employee. We're making sure that there's a hold harmless agreement in place.
Yes.
What else is important for these contractors to have in place, right? Because without that agreement, without the contract, there could be an issue with the action over coverage as well, right? There's some limitations in there.
They have to make sure before they get on the job site, they have the proper insurance and proper contracts. Because after the fact, it'll be too late.
It's too late.
They have to do it well before.
Right. So making sure that everybody has everything in place. And then umbrella limits too. Let's talk about the umbrella market a little bit now that we're in on this. So we've got our base liability. We've got our general liability policy that a small contractor is going to pay 6 figures plus for.
Sadly, that is true.
The small contractor is paying 6 figures plus for it. Right. But oftentimes these building owners, there's a requirement for 5, 10, 15, 20. And it's not just the building owner. It's the Department of Buildings in New York City tells you what umbrella limit to have, which then has to trickle down to all of your subcontractors as well.
Based on the type of work you're doing and the height, when you want to pull the permits, the city of New York will require limits. And it could be up to $25 million if you are working on real heights. You're over 20 stories high putting on that HVAC, or you're bringing a crane in to drop off that HVAC. They're going to want to see up to $25 million of limits.
Wow. Sounds expensive.
It is expensive.
Now, how's your market, how's capacity looking on the umbrella side? I know earlier this year and the end of last year, there were some capacity issues. It was very difficult to get 10 plus million on some of these things.
We call it a tower.
Okay.
And usually your GL is a 1 million, 2 million, or a 2 million, 4 million.
Right.
The next 5 million or so are usually very expensive. And then after you hit maybe above 10 million, it seems to calm down. And then you get
it seems to calm down over 10 million, normal rates.
At that point, you're already dealing with a very high premium.
Right.
So no one would have the stomach for the high premiums above that.
So
but once you build your layers up, the premiums calm down.
Over 10 million, the premiums come down. Yes. You're already spending a ton of money.
You're already spending hundreds of thousands of dollars.
But to put everything in perspective, we have an insured downtown. I think they paid $4 million for the building, probably put about $6 million worth of work into it. I just looked it up. It's for sale right now for $24 million.
So he's making a nice profit.
They're going to make a little bit of money on this deal. Granted, they purchased it in 2012. That's how long it takes sometimes. This project seemed to take a little bit longer than it should, but these New York City projects take a long time also.
Yes. Getting permits takes a long time.
So we've used a tactic also that on some projects, we pull an extended policy term, right? We do a project policy.
Yes.
We did one recently for 36 months. I think we're maybe halfway through it right now. I like that personally because it protects the loss side. If you have a claim or a loss in the first 12 months, if you have a 36-month policy, it's going to be very difficult for the insurance company to get off of it for the remainder of the policy
the insurance
term.
company can't get off it.
They're on it.
If you did have a claim early and you went to your renewal, you could see your premiums go up, and you could see companies not looking to write you.
So it becomes very difficult. So it's prudent, for any building owner that's going to be doing this kind of large projects to look to get ahead of it and buy that extended policy term for as long out as you possibly can, right? We
actually recommend when the GC picks a term, add 3 to 4 months to that term because there's always construction delays.
And then 6 months on top of that.
Yes. And then there's delays to get permits.
Right.
So, you think it's going to be a 2-year, maybe get a 2.5 year or a 3-year policy. So you're totally protected.
Totally
covered. Last thing you want to do is your last 3 months scramble and have to purchase a new policy.
Right.
No one has it in the budget to buy a new policy at that time. Everyone just wants the job to be done.
And the building's vacant for a period of time while you're getting COs and TCOs and getting everything done. So there is that wait at the end.
Absolutely.
Once you get all your fire inspections, your alarm inspections, and New York City does not move quickly when it comes to that stuff. So outside of New York, do you help agents like myself write business outside of New York also? Do you take some easy jobs too? It sounds
we do see a lot of New Jersey risks that have a little problem to them. It could be a contractor that's had a few claims, a contractor that maybe is a startup, doesn't have a big experience, a nice resume. Someone switching careers midterm wants to become a contractor.
Is that a factor that insurance companies use? They want to see the resume of the contractor.
They love to see a nice resume. Okay. Nowadays with LinkedIn, they'll look at LinkedIn, they'll look at the Facebook page.
Right.
They'll look and see when the company was incorporated.
Okay.
They like to see a nice pattern. If you're there 3-5 years, they're much happier.
Right.
But we're able to get insurance for startups.
Okay. We're seeing that. I'm seeing that on the management side as well. Right now, the management professional liability stuff, directors and officers, there was a period of time where on some lines of business, we're just quoting and issuing. Some of these harder lines of business, construction, management professional liability, directors and officers, employment practices liability, even cyber now.
Cyber's become a big area.
Has become very difficult, right? So 5 years ago for cyber, we had to fill out an app. We didn't know what the questions were. We just filled out an app. Quick. Got a quote and we were fine. 3 years ago, it was, what's the name of the company? Here's your quote. Sell it. Now it's, here's that 4-page app again, and we want you to fill everything out, and we're going to investigate this company and look in the dark web for everything that's going on right now. So
we've seen them come in and test potential customers' systems to make sure they're secure.
Yeah. So we're seeing, the underwriting process went from very manual to very easy to now, being very detail oriented. Insurance companies are taking less risk, I guess we would put it that way.
Hit in certain areas such as cyber with claims, they learn their lesson very quickly.
Right.
So if you want to get the lowest rates, you better have the best exposure possible.
Sure. So what else do we need to know about, New York City insurance for some of these buildings and building owners and business owners? What other tips can you give to anybody out there?
Well, for the building owners, there are a lot of policies out there. They're a little cheaper, but they have very strange exclusions on there. There's one company out there that actually excludes all claims on sidewalks. If
For liability?
For liability. So if you think about it, if you're a New York City building owner, your biggest exposure is really someone slipping and falling on the sidewalk in front of your building.
Right.
Whether it be snow, ice, or just someone on a crack on the sidewalk. This company excludes that. They'll cover inside claims,
right,
but not sidewalk falls.
That's a huge exposure.
It's a very big exposure.
To myself, to other insurance agents that are writing these policies, and not going to page 3 of the exclusions and seeing sidewalk exclusion on there.
We usually highlight those bright and yellow. We try not to offer it, but if they're offered,
right,
they'll be bold, and there'll be a phone call telling you, look at this.
That's good. That's one of the benefits of working with you.
The other area we see a lot of these for the policies for the owner are excluding all construction activities.
Okay.
Which is very difficult because if you're a building owner and the pipe bursts,
right,
the air conditioning goes, you have to bring in a construction team, even if it's just for a day job.
Right.
And you don't want to hear that that's not covered.
Right.
You don't have the time to get a new policy because you have to replace the air conditioning when it's 97 degrees.
Right.
Or even worse, you have to replace the heater and the boiler.
Wow.
So be careful of any policy that has an absolute construction exclusion.
Sure.
You really need to be able to do your daily maintenance, routine maintenance.
Right. Well, I see a lot of, the building owners, the condo buildings, they have very strict requirements for any contractor walking in the door, period.
Yes.
Right? Whether you're bringing in a couch and delivering it to someone's apartment, or you're going to go and paint, right? Like, there's very strict requirements because at the end of the day, everything funnels back up to that board.
Yes.
Right. So it's very interesting. So anybody out there,
building owners are getting more and more sophisticated because they get hit with an uncovered claim, and they're either paying it on their policy or out of their pocket.
Right.
So, they learn once and they're never going to let it happen again.
Right. There was a period of time where we used to, worry about, can we get flood and earthquake included on this building policy? Like, that's like the last thing we talk about now is the flood and the earthquake. It's, where are the rest of these exclusions hiding in there, and what can we do? And yes, we still want the flood and earthquake, especially in New York City. Yeah. whenever we can get it, even though they typically come with, $500,000 or $1 million deductible. Yeah. But we still need them for these larger sets. So, Darren, I appreciate your time today. It was great to connect, great to chat about this. If you're doing anything out there in New York City, whether you're a building owner, business owner, contractor, subcontractor, thinking about getting into it, reach out to myself. Darren is available to us, to my clients, to many other agents, as well as a invaluable resource when it comes to setting up these insurance programs and doing it the right way, and making sure you can present it back to the GC and the building owner who's hiring you so that you're well documented. And building owners and GCs are not afraid of your bids, by the way, because they're well aware of the costs associated with it, and they're pushing everything back up the ladder anyway. So everything's going up the ladder. There's a reason why houses and apartments are selling in the multi-million dollars, and part of it is because of construction costs and insurance, not just the real estate. The real estate's obviously very valuable as well. So, Darren, thanks so much for your time. It's great to hang out.
Look forward to working with you.